Hey, this is Mack with PriceActionTradingSystem.com, and this is Tuesday. It's May 26th. This will be our chart listing for the day. I hope everybody had a nice extended weekend this with the Monday Memorial Day. Uh, it's always nice to get a break and come back refreshed when you're trading, and so anytime you get a holiday like that, even if there is some limited trading during the day, my suggestion is to always take it off because the volume's usually thin and not a lot going on anyway. But let's talk about today's chart. And uh, this was a relatively easy day. It's all downhill. Uh, we did get a little reversal at just right at the 2 o'clock hour. But you can see we had a nice two-tiered channel working down. We had a break, a couple of moves down to a new low, and then prices reversed. And I get this question a lot. People will see the break and a move to a new low, and then they start trying to buy. Well, you never know exactly when this trend is going to be over, so you got to draw a trend line or wait till you get. Really, you don't want to start buying until you get a confirmed trend in the other way, and you don't get that till almost 2:30 today. This is the first time you really get a confirmed trend in the other way, and a confirmed trend means you get your two swings and your third touch, which doesn't come really till right there. You might even say right there. And then it's pretty much you get a break and a move to a new high, and so it's probably over. So, um, but that's, just because you get a break and a new low doesn't mean you automatically start looking to buy. And sometimes you don't get a reversal at all, you just get a correction. And that could be just a trading range that lasts a minimum of about an hour. So make sure you understand that because a lot of people miss that point, and they think that once you get the break of the trend line and a new low, then it's time to start buying, and that's not the case. Um, so be very careful. I had somebody send me an email over the weekend, and you had a little trend like this working up, and they're trying to sell it all the way up. It was more of this position right here. They had a trend line working up, and they were looking for, I guess it had a break and a new high, and then they were trying to sell every move after that. And you don't do that. You don't want to start selling an uptrend until you get a confirmed downtrend. You don't want to start buying a downtrend until you get a confirmed uptrend. So make sure that's real clear. Um, the other thing, I'm getting a lot of questions. Somebody asked me, I probably get it 5 times a day, every day. I see you did the 6,500 today. Should I switch over to the 6,500 or should I stay with the 6? There's no real difference between the 6,000 and there's the 6,000 and there's the 6,500. I mean, they're almost basically identical. There's just very little, if any, difference in them. So don't worry about it. Pick whichever one you like and go with it. I may change back to the 6,000 tomorrow, but for now, I'm pretty much sticking with the 6,500, and probably in a few days, another week or so, unless something changes, I'll probably just delete all the rest and I'll stick with this one. But no two tick charts are alike. So the fact that you're using a 66,000, it doesn't look exactly like mine, doesn't matter, because even if you use a 6,500 just like me, your chart won't look like mine. And I don't know, people have a hard time understanding that tick charts are not static like time-based charts. So no two tick charts will ever look exactly the same. If they do, it's just an accident, because it basically, we're counting, and this is a volume chart, not a tick chart, but it works the same way. We're counting volume, so you would have to start at the exact same count, end at the exact same count to ever get them to look the same. And there's no way to make your chart start counting at a certain specific time. So your chart is not going to look like mine. If you put a 6,500 volume chart on here and you use 21 days a day, that's going to be close. But your bars probably still won't look exactly like mine based on when you open your chart and when you close it and so forth. I close mine down every night and reopen it every morning. So, I can open this tomorrow and my chart will look different because I'll get historical data instead of what printed during the day. So just keep that in mind. It's not that critical. As long as you've got the same number of bars and you've got similar patterns, that's all you need, and that's the best you can ask for with these type charts. They're not static like a time-based chart. If we all open a 5-minute chart, everybody's chart would look exactly the same. Well, that doesn't work like that with tick charts and volume charts. It's impossible. So don't worry about it. As long as you got a similar number of bars and similar patterns, you're good to go. And so that means you can see here, there's my 6,000 volume, and there's my 6,500 volume. They both look exactly the same. The bars just may look a little different, but otherwise the patterns are the same. So I could use either one of these and get the same thing out of it. Wouldn't matter. And so keep that in mind. Um, but let's get through the tick chart here, or through the 6,500 volume chart setups today, and we'll call it a day. But real easy day. It's all downhill. This was the first time. It was late morning before we even got the first break that went above the EMA, and you could say then we had another little short-term trend that worked down to the new low, and then prices reversed. And even then, we continued to move down, and you know, make new lows here. So just a fairly easy day. If you had a hard time with the day, you got some work to do, because it doesn't get much easier than this. This is about as easy as it gets. These are the kind of days I wish we got every day. And we'll get periods where you do get days like this, either down or up every day. But then you'll get periods where you have lots of range days every day. So you have to be able to switch gears. But let's talk about the trades. First trade I saw after I came in this morning is the second entry right here. Let's just make this a little bit bigger. And you can see the new low, pullback, first entry, pullback. There's actually a second entry right there. I didn't really like that. That's not a very good setup bar. So you probably were better to wait until it broke higher and then turn down and go short right there. And then you kind of had that trap, and that kind of set the trend line, and then this confirmed it. So that was a nice place to go short right there. And quick, easy move. And then we tried to go higher twice more, and this one came right off the trend line. This is really a double top right at the trend line EMA. It's a second entry short, pullback, first entry, pullback, second entry. Normally, I'd like to see a little bit better trend line or signal bar than that, but in this case, I think it was close enough, since it was coming right off the trend line where most of your best setups will occur. And the fact that, we tried to go higher 2 more times and made that double top right at those important areas. And so it turns out to be a good trade. And this actually made a new high here. This is still a double top, but this is more like a trap when it goes higher there and turns down. So, but anyway, you got a new high, pullback first entry, pullback second entry. We weren't back to the trend line yet. It's not a perfect signal bar, but it's a failed second entry long right here that probably trapped a lot of shorts trying to pick those new lows, trying to pick the low of the day. And so I like that one. It's a little bit aggressive though, so I did mark it in green, but pretty good setup. And then you get another similar setup right here. This is almost a repeat pattern of this. You got a little failed second entry long there, pullback first entry, pullback second entry, a nice little reversal bar. Don't know what yours probably look like, but it's very similar to this setup, almost a repeat type pattern. You probably did not get a runner out of it. That was a good thing. These first couple, you were able to get runners out of them. And if you just caught one of these with a runner, you could have stayed with this trend all the way to the bottom until it broke out right here. So remember those, about those runners. This is the kind of days where you want to try to catch runners. And then we came back here and we made another little trap right here. Notice this pullback first entry, pullback second entry. I really didn't like this setup here. This is a doji. It almost closed on its high, so it's really a bullish type bar. But when it broke lower, pulled back, made another lower high, and went down right there, you got to figure, that's what's been happening. It's very similar to these other patterns. And so I liked it. And then it pulls back, and you got all these matching highs and a little break higher, and then it turns down. You get this big bearish bar. But again, I made it green. It is off the trend line. But look at all those stacked up there. That's definitely congestion. And it does pull back, break lower, pull back, and then turn down. So if you didn't go short here, I would have liked it better here. But if you didn't take this one, it even looks more congestive here, even though there is a little bit of a break lower and a pullback. So you really could have entered any of those, either of those two places, but I still think it's a little bit aggressive, so I marked it in green. But those are where the best trades usually set up, right off those trend lines. But we've had a pretty good move down, and you got to be careful about getting trapped now. And this one I almost made green too. But notice this is a new high, and even though there's two legs on a bigger picture, that's one leg, and then the first entry pullback, and then another little trap. So it's kind of like a little breakout pullback short, failed second entry long. It's a big bearish bar, and it's so close to the trend line there. So I like that one for a short. I really went back and forth whether or not to make it green. It's because it's always dangerous, especially later after the opening, to go short at the low of the day. But this has been a pretty good downtrend. Everything's still below the EMA, and whenever you get the EMA and the trend line that converge there, like right here, those generally turn out to be very good trades, and you're usually going to get a bigger move down. And so I really thought we'd get more movement there. So I left it red, although it's very, very close. And here's a good example of what happens when you go short at the low of the day. It's not as good a setup as this one, but notice how it's close to being at the trend line, and had you gone short right there, you would have got trapped. And so that's why I'm always saying it's better to have room between your entry and the low to scalp out. And when you go short at the very low of the day on a downtrend, or the very high of the day, you go long on the very high of the day, there's good chance that something crazy happens, even if prices are going to go lower again, like they did here. So you got to be very careful with those. Then we got a new low. We pull back, first entry pullback. That's the second entry short. Very bearish bar. It's the first break of the trend line, the first move above the EMA. If you draw a trend line right up through there, you get a close outside here in that new high. So I really like that one. Pretty good move. It didn't get any runners because it came back. Actually, you had room to get a little bit there, but it comes back, and it gives you another chance to get short right there. Another big bearish reversal type bar. There's actually a failed second entry long right there that gave you a trap, and it did go out one side and go out there. I probably should make this one green, but I really, there's been so many good trades. I think it's too risky to risk one like that. But there's reasons to enter that trade, and turned out to be a good setup too. Then it pulls back, and this is just a first entry here. There's no break of the trend line and new high or anything like that. And notice we overshot, and that's usually a signal that, hey, we may get a break. We did it. Turns out it was a great trade, but this is one of those you just have to kind of watch go without you. But notice you get a first entry. There's a new low there, so there's first entry, pull back, and there's actually a second entry right there, but you can't really count that, even though it broke higher and went lower. You definitely don't want to go short right there. But when it broke lower and pulled back, and then now you kind of got that little failed second entry long on a big bullish bar, especially after that break in a new low. But I wouldn't be going long out of something like that. I want to see something much nicer with a second entry or something of that nature. And so if you were still paying attention, you could go short there if you didn't get fooled to the long side. But that's why, on a strong trend day, you better make sure you're making higher highs and higher lows before you start entering. Don't be trying to pick bottoms, because that will lead to ruin for you. And then here it was again. you got another chance. It looked like it was going to go higher, and then it reversed. And look at that big bearish bar. Just by sitting there and waiting, you get that setup, and it's another easy one. And then finally you start working higher here. And I probably wouldn't have gone high until this bar and maybe even this one. I wouldn't have gone long. But by that time it's well after 2 o'clock. Doesn't matter anyway. So on days like this, until you get something confirmed going in the other way with multiple swings, just stay with the trend. And you can't hardly, I mean, you know, even if your timing wasn't perfect on these, this would have been the only one that you had to have perfect timing on. And there's really not a setup. You might have thought about taking that first entry with that little bitty doji, but that's why you wait on a good signal bar and a second entry, especially after you've moved that far down already. But a really good trading day, a fairly easy day. You could just about take any one of these pullbacks and go short on it and do okay. Even that one, you could have taken it, but in that one, I mean, they're most, even that one. So, I mean, there's lots of, you could have taken that one, but we won't take them because they don't fit our rules and we don't want to get trapped. And, you know, but a lot of times on strong trend days, every single pullback that gives you a chance to get short is just about a good bar to go short on. And if you follow the rules, you hardly get tripped up at all, and it makes it a fairly easy day. So anyway, great trend day. This is what we would like to have more of every day for the most part. Not much else I can say about today, so I'm going to wrap it up. Hope you had a good weekend again. We'll be prepared to do it. Have a short week this week due to the holiday Monday, but I'll be back again to do it tomorrow. So, but I'm going to wrap it up for now. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.